nobody saw this coming. Just months ago, everyone thought the housing market would keep exploding upward. Realtors were bullish. Investors were buying. Social media kept screaming, "Buy now before prices go even higher." But then, everything changed. Homes started sitting longer. Buyers disappeared. Sellers got nervous. Mortgage applications collapsed. And in some cities, prices quietly started falling. So what in the world happened to the housing market? Because right now, we're watching one of the weirdest housing markets in modern history. Home prices are still insanely high, but demand is collapsing at the same time. Normally, when demand drops, prices crash fast. But this market isn't behaving normally. Instead, the entire housing market feels frozen. Buyers can't buy, sellers won't sell, and everyone is waiting for someone else to move first. The biggest reason? Interest rates. A few years ago, people locked in mortgages at 2% or 3%. Money felt almost free. Families could suddenly afford bigger homes because monthly payments were cheap. That created a massive buying frenzy. People overbid on homes. Investors rushed into real estate, and prices skyrocketed. But then inflation exploded, and the Federal Reserve raised rates aggressively. Now that same house suddenly costs hundreds, sometimes thousands, more every month. And that completely changed buyer psychology. Because most people don't buy homes based on total price. They buy based on monthly payment. And when payments become unaffordable, buyers disappear fast. But here's where it gets strange. You'd expect prices to immediately crash after demand collapsed. Except nobody wants to sell anymore. If you locked in a 3% mortgage during the pandemic, why would you trade it for a 7% mortgage today? You wouldn't. And millions of homeowners feel the same way. So instead of selling, people are staying put. That's creating an artificial housing shortage. Inventory remains low because homeowners are trapped by cheap mortgages. This is why the market feels broken. Demand is weak, but supply is restricted too. So instead of a dramatic crash, the market is slowly grinding to a halt. Builders are getting squeezed as well. Construction costs remain high. Borrowing money is expensive, and fewer buyers can afford new homes. Some builders are already cutting prices or offering incentives just to attract buyers. That's usually not a great sign. But the biggest danger may actually be psychological. Housing markets run heavily on emotion. When people believe prices always go up, they rush to buy. But once fear enters the market, everything changes. Buyers wait, investors panic, and sellers start competing against each other. That's how momentum flips, and we may already be watching that happen. In some areas, price cuts are rising fast. Luxury homes are struggling, and homes that once sold instantly are now sitting for months. At the same time, millions of younger Americans feel completely locked out of home ownership. Wages haven't kept up, rent is still expensive, and mortgage payments are reaching absurd levels. For many people, owning a home no longer feels realistic. That's a massive shift, because for decades, buying a house was considered the ultimate symbol of success. Now it feels impossible for many people, and that's why this housing market is so confusing. It's not a normal crash, it's not a healthy boom, it's more like a giant financial stalemate. Everyone is stuck. Buyers are waiting for rates to fall, sellers are waiting for buyers to return, and eventually, something has to break, because this frozen market can't stay frozen forever. The next move in the housing market could decide who builds wealth, and who gets completely left behind. If you enjoyed this video, like, subscribe, and share for more content from Finance Logic.